Why were there no ticks that crossed over 1,000 and held there? I don't understand that. I mean, I do understand it, but it tells me that the move up should be faded at that first resistance point. And why in the second 15-minute bar, when the market is still quite positive, right? Well, actually, I mean, it fell down almost to the open, right, on the ES. But why is this relationship of the stocks down-ticking versus up-ticking on the NYSE, why is that plunging to minus 752 immediately like that, right? And there was no sustainability here. And not only that, there weren't even any plus 1,000 ticks. The high here is 998. The high here is 960. So right off the bat, it's giving me a lot more confidence to be fading. And again, don't get me wrong, it's not fading the gap, because fading the gap is more or less off the open. And the market did move up for the first 15 minutes. There's no doubt about that. But when it started to move up, it tells me right off the bat that it's probably not sustainable. And I can be looking at either a technical pivot, which in this case, there was not a technical pivot. I don't believe it. All we could have used was R1. There was a little bit of a prior high on the ES on March 5th. The high was 703.50. Am I correct? Right. Which is interesting, right? You have a high of 703.50 on March 5th, and then the high point on March 6th, we only went as high as 699. So it would have been a little bit easier read if we had crossed over the 700 and gone to that prior high, but at the same time, I knew that I had an R1 level at, I apologize, I don't have it written down, but I know it was somewhere around 701 on Friday morning. So even if I was throwing, contracts up short at 699, it's not so bad if I could to control risk and say, you know what, I could put a 5-point stop here because my upside could be as much as 10. Right? I could fall all the way back down to 690. The S&P's opened on that morning at 688.75 was the first tick. As far as when I say open, I mean 9:30 regular Eastern Standard trading hours for the stock trading hours. Same. So we opened at 688. So you're looking at 12 points right there from that 700. Right? High was 699, so 11 points. Right? And then the low end of the first swing move went all the way down to 673. All right? Now, that being said, let's continue onward and look at the relationship between what was going on under the hood as the market started fading off that 930 candle, right? Right off the beginning. And again, this is set here on 3.5. Let me go to 3.6. I apologize. When I changed that, I had it set wrong. There we go. So that's the candle that I want. It was 930 at 3.6, right? So second bar down, and by the time we get to the third bar, we have already tested the lows, right? Now this is a classic descending triangle, which you'd obviously be looking to short at the lows. But would I be looking to short it at the lows if the internals were strong? Definitely not. Now I'll be the first one to admit to you that on this particular day, the breadth is not really showing its hand, right? It's a little bit more tricky to see what's going on with the breadth. Let me just put it up on another chart here. Because the breadth was holding up pretty positive, and that's here. It did refuse to fall. However, keep this in mind. The internals sometimes can act independent of each other, but if so, only for short times. And that's a really important point to remember. I'm going to say that again slowly, because it's really, really useful. The internals can act independent of each other, and when they do, they fake you out. However, they can only do that for a short time. They cannot continue to fool you more than approximately 30 minutes if they're all out of sync. And what I mean by that is, in this case, the breadth cannot stay positive very long if the advancers and decliners have already moved under zero. Notice that here in the fourth 15-minute candle, the ADVN minus DECN, right, has already gone negative, yet the breadth is still trying to hold positive. And if we look at what has happened in the relation of the ticks here over those 4 times, notice that not only are we not getting any plus 1,000 bounces, now the ticks have bounced much lower. Now we've bounced to plus 550, plus 602, and here a high of plus 542, right? And the majority of the tick action is starting to be underwater. The red line is what I call the zero line. It is essentially zero, right? At this point, it's at parity. There's the same exact number of stocks upticking on the NYSE as downticking, right? But the majority of the action has already started to get negative. And as the markets really sold off later in the day, you can see that the majority of the action was really happening down here, and the high ticks were almost minimal. You were bouncing up into the 450 area, if that, right? So that's a really, really key thing to know, because I'm sure that I could tell right away that this was a tricky day to do for a seminar day, but I wanted to use the most recent day. And I knew right off the bat that I'd probably get questions saying, well, you know, but you said the breadth is the king and it's really positive. And I agree. The breadth was a little bit of a faker on Friday. It was kind of faking out, holding up quite well. But like I said, it can't do that forever. These things cannot stay out of sync more than approximately 15 minutes to 30 minutes maximum. Maximum. They just can't, okay? And again, and then notice how the market collapses really fast. I mean, the move in the ES starts to get very violent almost right from the get-go, right on the second bar. You retraced, 85 to 90% of the up move, and then you've come here to the 685, and then it's just chaos, and you just fall back down hard. So, so right now I want to take a pause, and I want to, if we can, let's go to questions if there are any, and that'll help us to open this up further, because I'm sure that as we get some questions, we'll look deeper and deeper into this. Some of them